capital will always find a way to get out if they, let's say, on any front whatsoever.
Are you sure it can happen in Kenya?
Well, Kenya is a tough one. Okay, that's a hard question.
I know, right?
And you're not even talking about a global market.
Hello, traders. I hope you're having a wonderful day wherever you are. Once again, yet another episode of Bullish Banter. And today is going to be macro a bit and hopefully educative. I'm joined by, of course, my usual culprit, Rufus. How are you doing?
Yeah, I'm doing well.
Okay.
Yeah.
How is everything?
So far, so good.
Bitcoin is okay, eh? Yes, we are going right into it, all right? Of course, you might have seen him before, Dominic, and he joined us just before Trump to at least break down some of the macro factors moving the market and policy directions. How are you doing, Dominic?
I'm doing great.
Yeah, since the last time, I will admit, the guy won. So me, I'm just coming to pull up receipts on how things are going. And I'll get right into it. Of course, a lot has happened within the last, should be around 53 days since he was sworn in. But 3 months or so since Trump won and set his agenda on motion. What is your view on everything so far?
He's a little bit erratic, trying to make a statement for probably some countries viewed him in the first term.
Yeah.
It's not the same Trump, so he's trying to make a statement. He'll be as aggressive as he can because it's his last term. Hopefully, he may calm down a bit when he notices how the market responds to his tweets or even any sentiments he may give off to the market.
Do you get a sense that some of the promises he made that were crucial to his core campaign, do you think he's living up to them? Is he going overboard or to some degree is deviating from what people or yourself expected?
Well, for me, as a gold bug, his promise on setting up Bitcoin reserve, using taxpayers' money to buy more Bitcoin, I didn't find that to be logical. There are some entities like Saylor who are pushing for that for his own reasons, of course. Him backing out from that, I think that was a right call for me. When it comes now to draining the swamp, I don't think that will happen because part of the swamp is on his side.
Okay, we'll get definitely to the most important sectors or different sectors.
Yeah.
Rufus, based on some of the promises we discussed in the last pod and some of the actions we have seen in the last couple of days, what is your immediate reaction so far?
Well, I would say that the Trump sword is very hot. Has already hit USAID. The climate change guys have already been hit hard. Wasteful government departments, like the Department of Government Efficiency, is really working. Like so far, they have saved billions worth of wastage, and about 30,000 government employees have already been fired or put on leave.
Yeah.
So if it hasn't hit you, it will still hit. Okay. So in terms of his promises, like his campaign promises, I think they are going really well. It's only that for us guys in the markets, we are suffering.
Okay. Yeah. There's an interview by Jamie Dimon at the Stanford Graduate Business School where he was asked, what do you see or find as to be what concerns you a lot that keeps you awake, And he runs one of the largest banks in the world, not only by asset, but obviously commercials. He said he's worried about geopolitical tensions emanating particularly from tariffs and that confrontational approach to it. Of course, Ukraine being armed and whatnot armed and all that talk. And just, I think a few minutes ago, Russia has rejected the 30-day ceasefire deal. As a trader, volatility is good. But then again, unpredictable volatility and unsustainable or rather uncertain volatility can be again damning. What is your take on, of course, that statement by Dimon, knowing his position and obviously his influence in terms of policy?
Well, if you're going to look at the last episode that was here, we had already predicted, me and Rufus, not you, we had predicted that Trump, of course, will be going for a peace deal. But what we did not foresee is on the Eurozone side, they're still pushing Ukraine to continue with the war. So that was an uncertainty that we didn't foresee. Going forward, I think probably Trump will let Russia have its way with Ukraine, knowing that the Eurozone is a little bit fragile. They are totally dependent on the US military bases on their soil. So if, let's say, push comes to shove and they were to withdraw much of the military bases, spending, like right now, I think Ursula had proposed using unused savings for military expansion. Military expansion is an unproductive activity. So that's just harming the EU even more. So even though he's pushing for these tariffs and such, we had already mentioned this: capital finds safety.
Yeah.
The US is still safer than Europe, even with the current state at the moment. So I'll still find, right now, what I find is people are uncertain on the US, but they are definitely uncertain on the Eurozone. So they are hoping that the Trump will get settled really fast so they can still, so the capital can still flow to the US. That's my sentiment on that.
Okay. Maybe to add a little bit on that, for those who are not familiar, Ursula is the ECB, European Union President.
Yes.
European Union Commission President. I
Yeah.
think so. Just to add something on that, Rufus, China has been like, you want war, you decide which one you want. We are ready for it. And this is not a good statement, ideally.
Yeah.
And I was telling you earlier, when was the last time you remember EU decided to increase funding on their military, infrastructure? What followed is not a pretty situation, but it is something every somebody who has read history will know that when European Union arms itself, what follows is normally not good for humanity. Are you worried about the current, I would say, for me, tariffs are not a good thing.
Yeah.
And no one here, I would say, even as you put it, EU is fragile.
Yeah.
I don't think US has the cards to fight all these wars. You are fighting Mexico and Canada. You are fighting European Union. You are trying to sort Russia or cozy to Russia. You are trying to fight, China. I don't think they can do that. What is your view on how these things are escalating?
Well, to begin with, the US absolutely can. They have the dollar, they have the printer. they can do whatever
Printer.
they want. Yes.
I think the printer can be a good tool.
Yeah. The only thing we are not sure is whether they have the gold at Fort Knox.
Very good. Very
So
good.
let's talk about EU. EU used to be like really scary.
Yeah.
When they had like full scale manufacturing, when Germany was like a top manufacturer, France and so on. But right now, if you really look at Germany, like the economies have been, I would say, contracting.
Yes.
So for the last 2-3 years, if you look at Germany with Volkswagen closing some of its factories, out of European companies moving to their production to China and other countries in Asia, I don't think they have the financial muscle to continue the Ukraine war.
Yeah.
So one thing that Trump mentioned before he left his previous term was that if you guys are concerned about Russia and all your spending is basically coming from, is basically going to Russia, that is spending on energy, then you're basically funding Russia to attack you. And now, fast forward, Trump was proven right. So even after the war started, that is Russia-Ukraine war, so far the EU has spent more money on Russian energy than military aid to Ukraine. So if they are willing to continue the war, are they going to cut expenditure on energy with Russia?
Okay.
So I don't think it's a big threat.
Okay.
Yeah.
Okay. Interesting. I have something on that. I was looking back, on issues to do with oil.
Yeah.
And if I'm not wrong, last time he made such a promise to Saudi Arabia and the OPEC community that he will impose sanctions on Iran so that they don't Iran oil exports.
Yeah.
But of course, so that even if they increase their production, it will match the market demand. But he went on to say, okay, not all Russian exports, some few that go to Europe, those ones are okay.
Yeah.
And it ended up messing the OPEC sector. Is it that now maybe as he tries to make these deals, there's a lot of trust deficit, not only on his word, but also on his pronouncement? Do you think that, as much as he makes threats and all these promises of resolving some of the key, I would say, geopolitical issues, there is a lot of trust deficit, especially from global, leaders across the board, that is?
When it comes across the board, I think there's that distrust, but also there's some concessions that have to be made. For the EU, you find that in the past, they have sacrificed, how do you put it? Instead of buying cheap energy from Russia, they get expensive gas from the US in exchange for them to guarantee that probably you're going to offer us military backing, or else you're going to fund whatever delusions that we have. So there's that. Now with Trump either way going all out on energy, and the EU going on two fronts. Now they have the EU has a delusion, and it has been the case for the longest time, that Russia's vast resources are not being put into use. So if, let's say, they were to push for instability in Russia and some of these areas were broken down, then they can use those natural resources to eliminate the government mismanagement on their end. And that's why this situation has been going on time and time again. That's the idea that some of the leaders have. But at the moment, they are going on two fronts, which they can't win. On one end, you're going on green energy, which is technically impossible. The US financial system already pivoted to once Trump got in, everyone is like, oh, by the way, oil is actually a good idea. We have just gotten out of this net zero initiative. So I think we had mentioned it, but in the last time we said when it comes to making sense of things, the US will always pivot if it benefits itself. For a European, they will watch themselves bleed out and they will continue cutting the open wound. So that's the issue.
Very nice. It's good that you are stuck with oil and in terms of shifts in regulation. I think if you look at oil prices today, US oil is trading at around 66, UK oil at 70. And of course, he had initiated, or rather instructed, that oil drillers or companies to drill, but most of them have been like, no, we don't see the demand in the markets generally. Are we likely to see even the price of oil sliding further, given that now, or a rebound, given that there is 10% tariffs on Canadian oil, and maybe there'll be retaliatory from other sector? Are we likely to see maybe price of oil bounce back, or maybe it will continue sliding given the uncertainties?
Well, I think Trump, based on his previous presidency, he really experienced the relationship between oil and inflation. So he knew 100% that if oil prices are up, then this is going to be a problem. Then if you look at the last 4 years and you understand what Biden did, when US inflation was at its highest at 9.1%, Biden started digging into their strategic oil reserve. He literally emptied the whole tank by injecting the oil into the markets. And that really contributed into inflation dropping to around 3%. So if he wants inflation to really drop back to 2%, then he will continue pumping more oil into the markets. So he doesn't have to do it directly. But then, yes, he's creating the environment in the US. But in the last 4 years, the US literally overtook the OPEC countries in terms of oil exports. So what we are seeing is OPEC realizing that, wait, while we were cutting our production, the US was taking more market share. And now OPEC wants to expand their dominance in the oil market. So in the latest move, they literally added Brazil, and Brazil basically joined the OPEC with a condition. They said, we are joining you, but there's no way we are going to agree to cut our output. We want to produce more. So there's a good chance that OPEC will be looking to reclaim their market share, and as a result, overproduce, leading to lower oil prices.
Well, that will be good for consumers, I guess, right?
Definitely.
Because it means energy production and manufacturing will go down. In line with that, and the dollar, because dollar will now be petrodollar in general. We have seen the DXY falling aggressively since the start of this month, particularly from around the highs of 108. Right now, it's trading at around 103. From your observation, is it that this tariff talk is negative to the dollar index? Is that a bad thing, a good thing, or what is your view basically on it? And will it likely continue even lower?
There are two ways. It's either uncertainty in the US or capital outflows. Capital outflows is bad. That's how empires collapse when there's deflation. So it's not, foreign savings are not moving out of the country in huge droves because the EU is even worse. So it has to be uncertainty in the sense that my business decisions, I want to plan things in the long term. So like let's say there are some commodities, or let's say there's some industries, heavy industries, where they make 15-year plans. Whatever you're doing right now, it's messing up the math. So if let's say they can hold on right now, then that's what you're seeing in the market. But when it comes to a time where capital outflows is moving out of the US, that's where we find the financial contagion. So just like COVID, but now a financial, where everyone is selling, and that's where markets collapse. That's really bad. We haven't seen that, so it has to be uncertainty with how Trump is presenting his policies. The good thing is his word is bond. So if he says something, whether bad or good, you know something's going to happen, but
you're not sure if it will last.
Yes.
Okay.
No, not lasting. It's more of if he says something, you know it's going to happen. So if he says tariffs by next week, the market reacts because I can take your word for it.
Okay.
If he says we are going to cut income taxes to 10%, even though it has a feedback loop, people already know that's going to happen. Okay. So markets, in a way, if he just gets his wording together, or let's say reduces his press conferences based on what he or how he knows the market will react, then we'll see some form of stability. And just sorry to take you back to when you mentioned China. You had mentioned about geopolitics, and most people say, well, China, how China organizes its stuff. When you look at its EV industry, you find it's trying to reduce its exposure to the oil and gas, mostly because what it saw Japan going through. If you remember the embargo before the World War II, where Japan's oil imports were hit with a blockade. So the entire concept about having everything electric, having as many coal and as many nuclear plants within the country, that's to avoid geopolitics.
In energy independence.
Yes, so it's more of insulating yourself. If let's say they are to do anything, and right now you're finding like the US is now pushing for what? Taking over Panama.
Yes.
So if they were to hit you with a proper embargo, then that means it affects you as a country. The same way Japan was hit. Yeah. So that's the final part I want to talk about. Sorry for taking you back.
No, it's actually a good, we'll catch up on the stock market as we continue. Yeah. Rufus, last year around September, we saw Bank of Japan hike by around 15 basis points. And they have indicated that they are doing some actions to do the same. Yeah. And this month, JPY has been one of those pairs or currencies which have significantly gained against the dollar. Will Japan now be I would say, how do I put it? The final stroke that breaks the camel in regards to the DXY.
Let me add something on the DXY.
Yes.
Your favorite investor, Warren Buffett.
Yes.
Last year, he sold upward the absolute top.
Yes.
And he has been selling stocks since then.
Yes.
Accumulating a cash position of what?
300 billion.
Yeah, 300 billion. We haven't seen that before. So a lot of investors are...
that's why it's my favorite.
Yeah, 94-year-old guy beating the market. So a lot of investors who really enjoyed the Magnificent Seven, the AI bull run, we saw stocks being really overpriced in the last 2 years. And NVIDIA doing what, 200% each year for the last 2-3 years. That was huge gains. So as a result, we expected some investors to start converting their stock holdings into cash. Yeah. So a lot of investors have been rotating back to cash and of course gold. And as a result, we are seeing out of excess dollars in the market. That may explain why we are seeing a much weaker DXY.
So it's just in the market.
Yeah.
I think I'll have to ask you once it's done, what would be an indicator of cash outflows?
Yeah.
That's interesting.
So in between, and you combine that with the Fed rate cuts from September last year, we saw what, 100 basis points since September.
Yes.
Yeah. So that was a big contributor to the current weakness in the dollar index. But then when you look at the Japan side, I think there's a lot of long-term planning with Japan. So having suffered from deflation for over 2 decades, they kept the interest rates very low at negative 0.1%. Then last year, that's when they shifted from negative 0.1 to positive 0.1. Then rate hiked all the way up to 0.5%. So that basic shift in policy was a long-term move, basically declaring a win against deflation. So right now they are looking at oil being low, like oil has significantly dropped. So like import inflation was their biggest challenge. Labor or wages are increasing in Japan. So far the economy is making some good improvements. And now they are very confident that by May, they may implement another rate hike. So for this period where they had the yield curve control and their bonds were very undesirable, now we are seeing the opposite shift, which is really strengthening the yen. And this is impacting the reverse carry trade. So far it's becoming more of a threat, especially to the US economy. But then Trump has the whip, sanctions. So he hasn't touched Japan because he knows he's a bit critical. But if they try anything with their economy that significantly impacts the US, Trump will just slap them with more tariffs.
This guy is fighting wars across board, yeah?
Yeah.
You mentioned something about outflows. What would be a key indicator of, outflows of dollars from the US? What would be some of the, at least if I am a layman looking at the market or data, what would be the key indicators, at least from, or what would we be looking at?
I can't really say because it's more of, how do you put it?
Maybe bond yields, or let's say the reduction in FDI, something like that.
No, because when you look at it, the financial market got messed up after 1971 when government debt was used as money.
Okay.
So everything is connected. So you find, for example, is it the long, what do you call it?
Yeah.
No, long term. There was a LTCM or something of long term capital management.
Yes.
So it had its bonds in Russia and it had counted on the IMF to bail it out.
Okay.
So it had already over leveraged itself.
Okay.
So with everyone now pulling their money back, they couldn't meet those obligations. So the Fed had to come up with a QE. So the issue right now is the market's already interconnected, and one collapse on one side will affect all the others. Okay. So you can't really say, you can't really measure it with one particular indicator where you can say this is a sure bet of cash outflows.
I think that makes sense because when at some point last year, we would say maybe when Bitcoin price appreciates, you would notice a drawdown on gold or even stock market. Yeah. But right now, all of them are dropping. So you are wondering, where is the money going? That's a very good.
The interesting thing with Bitcoin, at times also Bitcoin shows that, because if you look at when Bitcoin was hiking on both fronts, on China and Europe, you find when there's war, there's capital restrictions. And Bitcoin so far has proved itself as the best path to move capital from one place to another, just to avoid those capital restrictions. So also for China, I think they got to a point they realized, okay, they have put a cap, or you can't get, I think, is it 50K USD?
Yeah.
Yes, 50K USD out of the country. So people started using Bitcoin. So they had to talk to the Bitcoin miners and they came up with that policy decision. Let's hit them from both fronts. So it depends. Capital will always find a way to get out if they, let's say, on any front whatsoever.
Are you sure it can happen in Kenya?
Well, Kenya is a tough one.
Let's go. Elon Musk and Tesla.
That's a hard question.
I know, right?
And you're not even talking about a global market.
Yeah, it's something we'll definitely cover. We have seen Tesla drop around 36%. I know some years back, around 2019, Tesla was like the unicorn in the market. You are guaranteed to get minimum 50% return at the end of the year. Right now, last year, it was the Magnificent 7. At some point, it went from Magnificent 5, 8, 9, list change and whatnot. Right now, Tesla, of course, benefits from importation from either Canada, and obviously there is that DOGE, Department of Government Efficiency. I would say people are not very much fond of that department and his actions and statements. What is your sentiment on the stock market performance so far?
I'll say for generally the stock market, then doubling down to Tesla.
Yes.
So for the stock market, I think even last year we had noticed it was overvalued. The PE ratio above 16 will indicate that.
Okay.
So the issue with the US market is the valuations keep on being adjusted upwards because now the foreign savings are flooding into the US market. So you have to keep that cycle going. Either way, it will have to drop at some point. Yeah. So that's the reality. When it comes to Tesla, he'll have been wise to keep his business out of governments. I'll just put it that way. Because in the first place, okay, there are two double whammies he got. So with Trump not enforcing the mandates on EVs, then that affects his business because now it's, well, I'm not being forced to, so I'll just go with the ICE. Yeah. On the second one is now involving yourself too much on politics. It's good to probably retweet one or two, but now going hard on as if you're the president of the United States on a foreign entity, then that one will influence their policies back at home. So if, let's say, it was a big market, considering Europe are big on, climate change, EVs, well, you don't want to push you can hold on when it comes to restricting freedom of speech, because that's the American way. But now going on into their politics, that was a little bit on overkill on your personal business, because now it means it means that when they are having policy decisions, they will have a way on cutting you off. Okay. But also Europe, I've repeated it so many times, Europe is just messed up. Because for one, you're trying to avoid China's cheap imports. We're going to raise tariffs on Chinese imports because they're killing off our industry. And then Tesla is coming in. Tesla is also hitting you on Twitter. So which are you going to pick? And your industry is not even competitive.
Let me make it a bit, interesting. Of course, there's the ongoing case which he has been fighting since Biden was president, about his compensation. Yeah. Do you think, of course, as a shareholder, I would not like to see my invested capital just decimate because of your personal political beliefs, right?
True.
Do you think his position is at threat should the board of directors convene or shareholders convene and they decide that he chooses either to lead the company?
Wait a moment.
Or proceed.
The last vote by shareholders, they voted that and approved his payment.
Yeah, it's already contested in court again.
Yeah, it's being contested by interested parties.
Yes.
But the
which
people,
are some of the shareholders as well.
No, the people who actually got the promise. He didn't just get a big payment because they just announced it.
There was an agreement on performance, I believe.
He said that I'm going to push this company to this much valuation.
Yeah.
We're going to sell this large number of astronomical cars. And if I do this, then I get paid this.
Okay.
So once he got to that and the billions were too big, then the guys who had their own interest decided to block the payment.
Okay.
But they put it to a vote. The shareholders agreed. So I don't see any reason why he should not get paid.
Okay.
But on the current issue with Tesla shares, I would say on the volatility, it's normal.
Okay.
Like Tesla shares being up, even the current 50% drop, it's normal. The stock basically trades like a meme stock.
Yeah.
But then one thing is guaranteed: you can't bet against Elon Musk.
Okay.
On one side, I haven't seen a president promote a top car brand since, I don't know if I should use the word Fura.
If you are to put it this way, but Trump is not for EVs, but he still pushes for something that he's not for.
Okay.
So that's more of a selling point that we know Trump is not an EV guy.
Okay.
But he's backing Elon Musk, not the Tesla itself. Mm-hmm. So
okay.
Well,
that has to come.
The only concern is that Elon took a really big bet on Twitter, which he borrowed back on Tesla shares.
Yeah, that's
so. If the shares really drop further than that, he could be at risk of a margin call.
Yeah,
on his own. Yeah. But according to his latest update, he said that Tesla is no longer a car company. It's more of a software and robotics company. Yeah.
Actually, changing the story of your company when it comes to startups or such, it raises the valuation to some degree. Uber has done it.
Yeah.
So
I mean, that is the best bet because if you see the sales numbers in China, if you see the sales numbers of Tesla in Europe, given that the companies you're saying, Volkswagen, Mercedes-Benz, they have decided to dump EV and go for hybrid, which Toyota has since done before. And definitely hybrid sells much higher compared to EV due to the obvious restrictions. Yeah. So I think that makes sense because now he can be able to outsource his software to maybe hybrid and other
Well,
businesses?
so far, if you look at the fundamentals for the company, they are really going well.
Okay.
Like he's going into software and robotics
Yes.
side, but he has also promised to double the vehicle production for Tesla in the next 1 year.
Okay.
And that's like a big goal.
Okay.
On top of that, he's making so much progress in getting FSD approved in China.
Yeah.
So with that, like a combination of factors, there's a really good chance that Tesla will make a very strong recovery.
Well, with the tariff stock going, I want to hold on to that for a minute.
Well,
now maybe.
I argue and you can just say,
All right. In terms of stock market, last year it was AI, right? This year there is tariff. So ideally, most of the companies that form NASDAQ, most of the companies that form Russell 2000, most of the companies that form S&P 500 do to some degree import some raw materials from abroad, yeah? And, with the tariffs, specifically on aluminum and steel, it will definitely impact their bottom line. You are an investor. I tend to think so. As traders, we are okay. I mean, up and down, find your way, hit your destination. How are you approaching investing in such an environment, or how do you be approaching it?
Well, most of the time it doesn't really affect. For example, let's say real estate doesn't really affect much. Now the only issue is when it comes now to the fast consumer goods, that becomes an issue. But the US has found a particularly good way of substituting some of its ingredients, and then having the regulator also being on board on that. So as long as the regulator is not an issue, then they will find a way on how to balance it all out.
Okay.
But I'll say they can still run it for four years. Some of these cycles, you find, like let's say for some industries, as I had said, they clock in, let's say, a 15-year plan.
Okay.
In the first term of Trump, you found the same issue existed, but it ran for the 4 years, and some of them had already made appropriate plans on how to weather the 4 years. Yes. But it won't grow as fast as some of those sectors won't grow as fast as, let's say, financial analysts would expect.
Okay.
Yeah.
Interesting. Maybe from your side, Rufus, are we likely to see some sectors maybe benefiting from such? Because I think, rather, if you look at Biden era, software companies really benefited a lot. In the Trump era, manufacturing was beneficial. They really benefited from that. Are we likely to see some sectors maybe getting a lot of cash in from that sector?
Well, what I would say is a major difference and like a big change is that in the Biden era, we had community banks collapsing left, right, and center, Silicon Valley Bank, and so on. So the one sector that doesn't have imports and exports is banking.
Okay.
Or the financial sector.
Okay.
So there's quite a number of things going well for them. On one side, the current sell-off in US equities is really attracting a lot of investors. So if you couldn't buy Tesla at the previous high last year, right now you're looking at a 50% discount.
Yeah.
So a lot of these stocks have really come down. And this, for me, screams opportunity.
Okay.
A lot of investors really look forward to owning some of these big tech, new tech companies.
Definitely.
So given the current conditions, we are looking at, on one side, Trump is pushing for rates to come down. Inflation, based on yesterday's report, we saw 2.8%. At least for the first time, we have gone below 2.9%. We have been averaging 2.9, 3.1, 3.4 for the last, 18 months. So there's a good chance that we will see the right conditions for people to invest in American companies.
Okay.
And Trump is already creating that.
Okay.
Yeah.
In regard, you mentioned something about banks collapsing.
Yeah.
And I think I'll join this question. SEC Gary Gensler resigned.
Yeah.
So at least now for paving way technically for massive crypto regulation and things like that.
Yeah.
And of course, FOMC, I think Powell testimony said that he will not react to tariffs until he sees the numbers or the data, and then he will make a decision based on that. And I think also President Lagarde said the same. Are we likely to see a gradual drop in interest rate hikes?
Yeah.
And what do you think now that we have a clear path with the presidential decree on cryptocurrency reserve? What do you think that will look like in the next maybe 6 or 1 year or so?
Well, I'm looking at a cocktail of changes. One with Scott Bessent in Treasury.
Yeah.
I think he's the right guy for the job.
Yeah.
Now we are looking at Michelle Baumann taking the deputy governor of the Fed,
Fair FOMC.
in charge of regulating the banks.
Yeah.
So in this case, she is looking to really change the policies that were implemented post 2008
Okay.
that really limited banks and basically cut their innovation.
Definitely.
So now we'll be seeing more banks being involved in innovation, like offering crypto products. And once that is implemented by Trump, then I think that will be the base case for a pump.
Okay.
So I would be very much interested in.
You're not bullish enough.
Really good chance that banking stocks will do well.
Okay.
Of course, Trump is pro-America, so American banks will most likely dominate.
Okay.
Then when it comes to the crypto side, the big question, the $1 million question is which coins will be in the reserve.
Okay.
So it's not just the industry, it's what will be on the reserve.
Okay.
Because if you're holding a coin and let's say you're holding some Bitcoin and you know that the US government is buying Bitcoin and it's not selling, then it's basically like they have established a floor on top of the existing floor.
Interesting.
So that basically kickstarts a very strong pump.
Okay.
Yeah.
I know you are not really a fan of this. Now I'll ask you a question that relates to you.
I can respond to that.
You will respond.
I can respond to that.
You'll respond to that. But I'll add you a favorite. Interest rates are falling right now. I think gold, as we record this, gold is doing around 29.50. Yeah.
Yeah.
The king.
Yes. Do you see some of these features? Some of this economic policy, and as you said, maybe banking regulation a bit changing. Does that increase the premium on gold, or now with less worrying about financial sector, it might, just hit 3,000 and then play around there?
Okay, so let's start with how the banking system works in the credit cycle. So after every banking crisis, there was some resolution. So I think 1930 there's the Banking Act, something of the sort, or 08 Siegel Act, and then before that, I think there was a Siegel Act, and then there was the Basel III of the 08 years.
Yeah.
American companies have not been with that, and their government has supported them not following to the letter what the Basel III actually stipulates.
Okay.
The credit cycle of the US is messed up in the sense that the easiest way for a financial system to grow is to finance financial transactions. You can get your money easier. The other path is the Chinese way, where you're financing productive services. That's where its company is growing, with its capacity to manufacture more products and such is being dominated by China, because their credit guidance or the window guidance is pushing towards particular sectors. For the American system, it goes towards financial services. So if, let's say, right now they're comfortable with offering credit for financial transaction, we are looking at a credit cycle that is pushing for bigger bubble and busts. If you can time, we are not looking even time in the market, we're looking at timing. If you can time that bubble well, then you're going to make a lot of money. But don't get your head stuck in the cloud, because that bust is going to come through. Okay. That's the issue with the credit cycle in the US. Because if you look at the China, it has been going well, but the credit cycle in China, which is a four-tiered system, was pushing too much into the housing crisis, and to some degree it burst. Okay. So for the investors out there, I'm not a trader, but be careful when you're getting into that. If you see a bubble, benefit from it, but don't get too carried away. Okay. Yep. For the gold, we have had this back and forth with Rufus, Bitcoin and gold, and my position has always been the same. They follow business cycles. So the idea that this is the best hedge against inflation, I will personally speak for gold that it's not the best hedge against inflation, because inflation is multi-layered. What it's good at, it's being a hedge against government mismanagement. When the people in different countries do not trust the currency, or let's say they have less confidence in their own currency, people flock to gold because gold is neutral. That's the issue. For Bitcoin, I will say it's a good trading and investment asset, but so far it has been the best path towards capital outflows. So if let's say war is imminent, and probably let's say the country has strict capital outflows, then the crypto space is the most ideal, and we'll still see more growth with that. Probably more people come with more products on that, but that's how I view both sides.
Okay, interesting. I think this marks a very nice ending to, I would say, a macroeconomics conversation.
Well,
thank you.
I had a question
Go
before I
ahead.
go.
Yes.
Do you think the US has the gold it says at Fort Knox?
They'll have to confirm it.
I think they have.
They have, but
I think they have, and the fear is
Yeah.
it is in excess of what it should be.
no, if it's in excess,
That's my view.
no, if it's in excess, they just have to play around with the accounting and they can wipe out their debt. It's a good thing if they find it's in
Yeah,
excess.
that's my worry.
Well,
That's why they are this bravado to make reckless statement,
Yeah.
knowing they can back it. But the fear of finding out.
for me, I think the audit is a damned if you do, damned if you don't. If they have excess,
Yeah.
then it means there's excess gold in the market.
It's bad.
Yeah, it's bad. and if it's lacking, then there's panic.
Then it's bad again.
Yeah, then it's bad again. So I don't think the audit is healthy for gold holders. Yeah.
Gold holders, gold traders, of course.
For
whichever.
traders, we go.
I think it's a good time to mention some of the gold. I think there are two categories of gold we have added for those who trade with FX Pesa equity.
Yes.
To be able to see.
So to our listeners, we have added new products. We have gold futures, we have silver futures, we have gold crosses across different currencies. And at the same time, if you want to place a big bet on the US top stocks, in this case, I'm talking about FANG, the Facebook, Apple, Amazon, Netflix, and Google, all combined in one instrument, then the FANG index is available for trading on our platform. We also have the Eurobond futures as well as the UK Gilt bonds available for trading on the same platform. So make sure to check it out on the MT5 as well as the FX Pesa's Equity Trader mobile app.
It's also time I mentioned that for those who would like to discuss love and money, the festival is happening on 29th of March. So make sure to check your tickets at Ticketsasa. We'll put the links down here. Closing remarks. And of course, your, words of wisdom. Until next time.
Well, I don't have any closing remarks. Gold is king, always been. But
Old King.
yes, old king. I will say for now, I will probably be looking into I would say for me, gold still is okay, but I will be very comfortable, be very careful. If everything settles down, then everyone will be pulling away from gold. And if the credit cycle in the US favors the likes of crypto and the equities, then you should probably do that. Words of wisdom, it's a pendulum. So government assets, at times it goes to government assets, at times it goes to private assets. Be aware of the cycles and then put your best. At times it's better to look at your liquidity. So don't stick to one investment philosophy. It might kill you in the end.
Okay. Rufus.
Well, I don't know if I have closing remarks today. Or one thing I would say is that as of this moment, as we are recording today on the 13th of March, gold is trading at 2,953.
King.
Only $3 away from a new all-time high. So by the time this podcast is coming out, what do you think will be the new price, and what's your target for the year?
My target for the year. For my year on gold. By the way, for you, just to make it clear, the chaos is just starting. These are just trailer series of a 4-year marvelous chaos in the market.
We will never know that because Kamala is not president.
Yeah, so
Maybe we will have been in World War III.
I view gold as gold and Bitcoin or rather some cryptocurrencies that they will take some inflows of capital from stock market. I think the tariffs by 1st of April or 2nd of April, whichever date and whichever country decides, this egotistical tug of war will end up messing a lot of economies. And with that, I think by the time this pod is out, if we're able to breach 29.70 at whatever point between now and when this podcast is out, we might be talking about maybe by December around 3,300 3,400 on gold.
So in short, as long as government mismanagement is still ongoing,
Yes.
gold is still
Gold
In
will
play.
still be in play. I think we will have a deeper correction in stock market. Personally, I am watching what Japan will do, or Bank of Japan. Very important in terms of all this domino effect on where the chips may fall. I will want to see how the North American trade war goes. If it is not resolved anytime sooner, 3,500 on gold. But by the time this is out, probably we'll already have hit $3,000. We have ranged for a minute. And I think that breakout yesterday, that would be 12th of March, was, I would say, a key indicator of maybe a beginning of a bullish run. Of course, this is not an investment advice, so it's just make your risk management appropriately.
Awesome.
All right. This has been your episode of Bullish Banter. I hope you have learned one thing. I know we rambled a lot on a couple of factors or politics or policies that are running the world. Should you, of course, wish to engage us further, you can drop a comment or a question in below. We'll try to answer it. You can follow myself, Ogola J4 on X.
Dominic Austrian.
Yes.
Rufus KE.
Yes. And of course, feel free to DM, ask your questions, and hopefully share so that more can learn.
If you've enjoyed the podcast so far, make sure to leave us a review, drop a comment, subscribe to our podcast, and we really appreciate all the feedback you can give us so that we can improve on wherever area you feel we can improve to make it better for you. Thank you.